Good morning. It's the 17th of August 2023. I'm Nazia Iqbal and welcome to a very special episode of the Business Standard Morning Show. Today, you're sharing your 500th morning cup of tea with us. For 500 episodes, you have inspired us to ask the tough questions on the latest in the Indian economy, business, tech, and markets. And for 500 episodes, we have toiled to bring you complex answers, simplified, crisp, and fresh out of the toaster. It has not been easy as we transitioned out of a pandemic and reacquainted ourselves with the new normal. Our team of writers, editors, and the production crew have been burning the midnight oil, trying to bring you a show which pairs perfectly with your morning copy of Business Standard. And later in the show today, we will be taking you behind the scenes to reveal the making of our daily news lineups and to meet the people who make our daily morning show possible. Let's first head right into the show, and today, along with our stories for the day, we will also get you reacquainted with each of our news segments. As always, we begin our show with the In Focus segment. The In Focus leads with the latest, most pressing issues in the world of financial news. From policy changes to tech breakthroughs, our first segment puts the spotlight on news and views you must know before you begin your day. For instance, today we take a look at the mounting challenges auditors appear to be facing. The latest example is Deloitte resigning as auditor of Adani Ports and Special Economic Zone on August 13th. Deloitte's resignation reportedly came weeks after it raised concerns over transactions flagged in a report on the Adani Group by US-based short seller Hindenburg Research. Earlier in June, Deloitte had also resigned as the statutory auditor of Byju's, raising concerns over the edtech's delay in filing its financial statements. This brings us to a larger question. Has the auditor's job become more difficult? Why are auditors quitting their roles at high-profile companies? Bhashwar Kumar asked the experts.
The ghost of the Hindenburg Research report continues to haunt Adani Group. Over 6 months after the US short seller came out with the report, levelling serious charges against one of India's biggest conglomerates, the auditor of one of its firms has quit prematurely. Deloitte quit on August 13th as auditor of Adani Group's port company, Adani Ports and Special Economic Zone, or APSEZ. It had sought an independent external examination of allegations made in the Hindenburg report, which had come out on January 24th. In the resignation letter, the Big Four auditor said it could not thoroughly scrutinize transactions between companies in the group and the logistics unit. Related party transactions were at the heart of the Hindenburg report. In its response, APSEZ said the report's allegations had no effect on financial statements, and the reasons cited for quitting were not convincing to warrant such a move. The Adani Group had also rejected the Hindenburg report's allegations. Deloitte had been the auditor of APSEZ since 2017. It was given another 5-year term in July 2022. Just a few months ago, in June, it had also snapped ties with Byju's after the edtech company failed to file its annual financial results in time for the financial year 2022. And in the first week of August, another Big Four firm, Pricewaterhouse, resigned as auditor of Paytm Payment Services Limited. These recent high-profile exits have once again brought focus back on the delicate ties between auditors and the companies they vet. Statistics collated by tracker primeinfobase.com show that a total of 38 cases of auditors exiting before the completion of tenure were reported in 2022-23. It is a decline from the 46 exits seen in 2021-22. In recent years, the maximum exits were seen during the pandemic year of 2020-21 at 65 such cases. Auditors don't only ensure compliance with regulations, but also contribute to the company's adherence to the laws. They hold responsibility for the financial results and audit reports of the company. The Companies Act mandates them to report irregularities to the government, and they pay a heavy price for lapses. Of late, experts claim that auditors have become a tad more cautious, especially after the May 4th Supreme Court ruling. The Apex Court allowed the National Company Law Tribunal, or NCLT, to proceed with its inquiry and any subsequent action against auditors of the bankrupt firm IL&FS Financial Services. The auditors in question are Deloitte and BSR & Co., a KPMG affiliate. The government had moved a petition in the NCLT in 2019 to bar Deloitte Haskins & Sells and BSR & Co. for 5 years, citing lapses in their audit. The government's aim was to disqualify erring entities from serving as auditors in any company for 5 years. Stating that the legislature should provide penalties for auditors' misconduct, the Supreme Court also affirmed that fraudulent conduct by any auditor was a grave misconduct with consequential actions. Against this backdrop, what do experts have to say on the role of auditors and why, in recent years, they have often exited before the end of their tenure?
The genesis of this focus on audit firms goes back to the IL&FS issue of 2018. And if you see what happened is that NAFRA, which is the National Financial Reporting Authority, as an oversight for the auditing profession, firstly had reports on the auditors of IL&FS. One. Two is the impact or the censure by NAFRA on one audit firm also led to censure of other audit firms of the IL&FS group itself, which were auditing other group companies. So this, I think, is the genesis, and this is a reputation, this is a huge censure, and the fines imposed and the Department of Audit Partners, etc., has led to auditors being more conscious about the firms they audit. No longer is it just a signature and collecting fees kind of a issue. Investors, regulators, and NAFRA, of course, are now closely scrutinizing the role of auditors.
I think the game has changed. It's more complex. It's interrelated across jurisdictions. Many of these companies also have foreign investors in there with significant investments, so the standards are different. The expectations from auditors are different. It's a more global governance regime that is kicking in. So I don't think there's one reason. It's a multiple of reasons where auditors have to take a larger view. I've seen that happen, where you had to measure what kind of disclosures you need to make overseas, and that's very. The auditors have to be very, very careful, because they are international companies, they're multinationals in their own way.
In June this year, the National Financial Reporting Authority said that quitting audit assignments would not absolve an auditor of its responsibility if any fraud was noticed during its tenure at a later stage. So, is resigning alone enough?
We don't know what the background is in these cases. It would be wrong to comment on these cases, specific cases. Yes, quitting may not be adequate. They have to flag the issue, bring it to the notice of the board, the investors, the shareholders, lenders, because they have that kind of a trust was reposed on them. So it may not be adequate, but it could be mitigating the going forward, their liabilities, both legal, reputational.
Deloitte had been auditing Adani ports for 6 years. Their audit qualifications were there already on the annual report, and the financial annual accounts was passed by shareholders at the AGM on August 8th. So it is surprising that they chose post the AGM to resign 4 days later, right? So that. And second thing which is surprising is that an audit firm is taking reference to a short seller's report, which is an external report. In fact, if anything, the audit firm should be inside and it should refer to its own data points or management this one. I'm not against what Deloitte has pointed out in the accounts itself as qualified accounts. but making reference to a short seller who is external to the company, that is, I think, a bit strange.
With auditing becoming a more complex process and investors and regulators becoming more active in recent years, auditors have had to let go of clients before the end of their tenure when they have felt that the cost of continuing may be too high. However, experts welcome this increased scrutiny and say it will prove to be beneficial in the long run.
At the morning show, we like to begin with the main course first, but that's because we have something special right after. From In Focus, we move to our specials segment, where we read between the lines, go beyond the numbers, and step back to bring you the larger picture. We ask the tough questions, our experts deliver the straight answers. And today, we'll take a deeper look at the tragic death of National Award-winning art director Nitin Desai. Desai had appealed against the National Company Law Tribunal's order to initiate a corporate insolvency and resolution process against his firm. The appeal was dismissed by the National Company Law Appellate Tribunal on August 1st. Desai was found hanging in his studio, Karjat, the next day on August 2nd. On August 4, his wife, Naina, registered a complaint at the Khalapur police station alleging an abetment of suicide case. So did a bad loan recovery process push Desai to suicide? Debargya Sanyal and Abhijit Kumar take you through the details of this sensitive issue.
Veteran art director and producer Nitin Chandrakant Desai was found hanging at his studio at Karjat near Mumbai on August 2. Desai is known for his work in Marathi and Hindi films like Hum Dil De Chuke Sanam, Lagan, Devdas, Jodha Akbar and more. This came a day after his appeal against an NCLT order which allows initiation of corporate insolvency and resolution process against his firm was dismissed by the National Company Law Appellate Tribunal. A couple of days later, police registered an FIR against 5 people with allegations of abetment to suicide based on a statement given by his wife, Naina. The FIR included Edelweiss MD Rashesh Shah and the resolution professional appointed by the NCLT. Edelweiss Finance, a non-banking finance arm of Edelweiss Group, had lent 181 crore rupees to Desai's firm ND's Art World between 2016 and 2018. As on June 30, 2022, the default amount stood at Rs 252.48 crore. In her complaint, Naina alleged that the officers of Edelweiss were responsible for causing mental trauma to her husband. Regulators and financial institutions have been working on the loan recovery process for long. Recently, the Supreme Court had ordered financial institutions to provide borrowers an opportunity to represent themselves before their accounts are classified as fraud. The top court held that classification of any account as fraud results in civil and criminal ramifications for the borrower, even leading to blacklisting. Blacklisting prevents a borrower from availing any subsequent credits. How then has Desai's case blurred the lines between the civil and criminal repercussions of a loan recovery process?
In this particular case that we're talking about, and there have been enough number of such instances, before the judiciary, before even the administration, before police status, on this regard, where not only is the person committed suicide, but in his suicide note, for example, if he makes any reference to the coercion exercised by or the harsh recovery process exercised by the lender, then the police will certainly get involved. Now, it does become difficult for the lender to defend in a situation like this. I mean, civil is a different subject. Criminal laws are very different,
So then, how do instances such as Desai's case impact the banking sector's loan recovery process?
The mechanism that has been adopted by the lender, in this case an NBFC, to recover the money seems to be in sync with the existing legal framework in India. If indeed unfair means have been resorted to have been taken by the lender in this case, which which can be proved in court, then I think it will not delay, and then accordingly the things will move. It will not delay blow to the recovery process. It will delay blow to unfair recovery. So that will be a lesson for the lenders, not for the credit culture.
In July this year, Finance Minister Nirmala Sitharaman said in the Lok Sabha that the government was aware of merciless loan repayments methods by banks. She said that the government had instructed banks to avoid taking harsh steps and the cases of loan repayment should be handled with sensitivity. So, is India's loan recovery process too harsh?
There is a system, there are procedures, everything is in place. Of course, not for personal insolvency is a different issue. There the frames are being worked out, and unlike NCLT, this will be dealt with by DRT. So that bit is still not there, but overall the recovery process has been set in motion. And is it too harsh? Definitely not.
The lender is a mere intermediary. He is mobilizing deposits or he is mobilizing loans in case of NBFCs, debt. And he's providing funding, let's say, to a certain sector. And the borrowers, when they enter into that contract, they take, they're obliged under the contract, to repay on time. Where the hope for recovery may have reduced, then they have to adopt some method. It's a very subjective thing whether to a borrower, he may consider it as a harsh treatment or he may consider it as a soft treatment. But in some form or the other, the follow-up has to take place so that the lender recovers his money.
While experts agree that the death of Desai is unfortunate, they emphasize that the established process of loan recovery is critical to the bank's lending business and isn't too harsh.
No business news is complete without a look at the markets. It's the toast of your tea and butter to our bread. And so every day, our markets team makes it a point to get you the freshest insights into stocks and options you should be watching out for. Today, we tell you about defense-related stocks. They have been on fire in the last few months as the indigenization theme gathered momentum and companies bagged equipment orders. Are all the positives priced in? What factors are likely to drive the next leg of the rally in these counters? And should you keep the powder dry in case they correct from these levels? Harshita Singh explores this in our next report.
Riding high on India's push for domestic manufacturing and indigenization of defense equipment, defense-related stocks have had a dream run this calendar year so far. Shares of companies such as HAL, BEL, MTAR Tech, BDL and Data Patterns have zoomed as much as 90% so far this year as compared to an 8% rise in the BSE Sensex. The sharp rally, however, is expected to stagnate in the near term as all positives have broadly been priced in. Companies may also not be able to deliver an outperformance every quarter that the street will look out for, analysts say.
Stocks cannot be really evaluated on a quarter-to-quarter basis. The order book actually plays out over a long periods of time, sometimes even 5 to 10 years. Now, they have got different milestone payments, so probably a lot of good news is already priced in. It was visible in some of the PSU stocks which were trading at like 30-35x. Some consolidation is happening. One has to be more selective because the market probably wants the result every quarter, which is not going to happen. The order book can be lumpy in this case. So I believe one has to be more selective in choosing stocks. While the long-term story remains intact, the short-term could be a lot of consolidation.
The latest June quarter earnings of defense majors were subdued on a quarterly basis amid seasonal weakness and weak execution. The Q1 net profits of Hindustan Aeronautics, Bharat Electronics, Bharat Dynamics, MTAR Tech and Data Patterns slumped 35 to 72% from the March quarter but grew 25 to 85% year-on-year. Revenue also saw a sequential contraction of 22 to 69%, while on a yearly basis, the revenue growth was in the range of 8 to 68%. analysts say this muted performance has raised concerns about whether the valuations have run up ahead of fundamentals.
Limited floating stock and chase for revenue visibility has led to these high valuations. While temporarily these stocks look fully valued, if they deliver results beyond expectations in future led by better execution, then there is scope for these stocks to rise even more.
Jasani further suggests that early entrants can partly book profits in this space, while those looking to add positions should try SIPs for select stocks. Thus, investing opportunities should be identified at a company level, analysts say. Today, on August 17, equity markets will take cues from global markets and react to the minutes of the US Fed's latest meeting.
He's making plans for an early retirement. Business Standard.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Now, usually right after the market wrap, we bring you the decoded segment, breaking down and explaining the key terms and trends dominating the headlines lately. But today, to mark this special cup of morning tea, we bring you an exclusive peek into what happens behind the scene and in the newsroom every day. What's it like to produce a morning news show, you ask? Well, come along, let's find out. It all starts here at the morning editorial meeting. Our editors and writers sift out the day's lineup based on what's hot and what's not in financial news.
The way we conceptualize TMS is like a daily audiovisual news magazine. And I underline the word magazine because, like Nivedita said, it's not breaking news. So we take what is in the public domain and then we visualize what should be the cover story, which is the in focus that we are talking about, and how do we embellish it by adding more and more value, because magazine, so we have to go beyond the news item.
Absolutely, yeah. And I think what we also look at is the viewer connect. You know, what is it that the audience will like to know from us, because we are giving them a special story. And so that is the basic fundamental behind choice of the story. Another important thing is the question that we ask. There has to be a hard-hitting question in all our segments.
Absolutely, because that is thought-provoking. In fact, unofficially, if you were to ask me what is TMS all about, I would say that if you watch TMS, it makes you aware, informed and smarter every day.
Absolutely.
Once the lineup is decided, the ball is in the writer's bay. Each writer is assigned a specific segment, and it's their duty to not only get you a comprehensive script but also connect you with the right expert.
All our writers juggle multiple stories.
Right. Often we are working on specials in advance, even as we get cracking on the in focus, the decoded of that day.
And we do have a dedicated markets team though, whose job it is to track the pits and peaks of Dalal Street every day.
And here are the guardians of fact and focus, our editors. They make sure each script has been proved, checked for facts and molded into a well-rounded narrative.
Clean copies, clear facts, sharp critiques, that's our motto when it comes to editing.
And once the scripts are ready, there are still a few crucial elements left. Voiceovers are recorded, graphics and pointers are added, anchors will say their piece, and finally, it's here that the magic happens. Our producers and video editors work well beyond midnight to make sure even the minutest details are in their right place and function together as one coherent show. And when it's all done and packaged, it is ready to be uploaded to the web and onto your breakfast tables the next day.
See you tomorrow.
It's been a tremendous journey so far. Thank you for being a constant support. Thank you for watching. Thank you for believing. And as always, for more news and analysis, log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.